Hey traders, welcome to Chart and Coffee. Hope everyone is doing great. All right, I don't know what that background is. There we go. All right, happy Tuesday, everybody. Hope everyone is doing well. All right, we're going to take a look at the pre-market together, and we're going to take a look at what might be brewing. We are seeing a couple interesting things. I'm going to walk you through one of the first steps we take in the mastery when we start off the morning. You'll see that the previous session closed. Now I'm on a daily time frame. This chart all the way over to the right, that is the daily time frame. And what I'm looking at here is simply the close. And the sound is a little tinny. Not much I can do about it right now. So we'll work on that for the future. All right, so taking a look at the close, that would be 48.80 and 3/4. So all I'm going to do is just change this manually to 48.80 and 3/4, and that immediately moves this little manually drawn line to the previous session close. And if you're thinking about the direction in which you're trading, it's three things. It's sentiment, it's momentum, and it's trend. And the sentiment, one of the easiest reads on sentiment, first thing in the morning, if you're day trading, or really any kind of intraday time frame, could be a 5, 15, 30, 60-minute, is find out whether or not we're trading above the previous session close. And these are pretty easy things to do in that regard. You know, basically asking yourself, am I or am I not trading with the broader sentiment? And so we can do the same thing on the indices, and I'll do the same thing on all the indices, any stock. So let's say I'm taking a look at the NAS here. And again, this is the first step. Now remember, it's a simple formula, if you will. Sentiment plus momentum equals trend. Trend is the most important thing, okay? Sentiment can come and go. Sentiment is actually really twitchy, right? Sentiment can come and go. Momentum can come and go, right? Momentum is not what is the largest overriding psychology, but sentiment plus momentum equals trend. And all of us know if we're trading well, we're having a good year, a good month, a good day, what do we know is at the helm? Sentiment? Maybe. Momentum? Maybe. But trend? Most definitely. So everything maps to how are we assessing the trend, and sentiment is the first step. The close for the NAS was 455 and a half. So let's go ahead and do that there. 455 and a half. What was it? 455. There we go. So once I've got all these levels marked, I know whether or not I'm above or below the previous session close, and I can get on to determining what the momentum is, and finally the trend. Now I'm going to move this chart on the left over and make it larger. This is the 5-minute time frame. This 5-minute time frame is what we're going to do. That's actually an hour. Let's move it to the 5. That's a 5-minute time frame. So what I'm going to do is take a look at the 5 and ask myself a few things. What's the structure on the 5? And this morning, if you'll take a look, the structure on the 5 is in an uptrend. And ultimately, if I have an uptrend, what I've got, I'm sorry, I've got this, I need a haircut. All right. So if I have an uptrend, what I'm going to be doing is focusing on the long side. So now I've got sentiment, momentum, and trend. You might say, okay, Rog, where's momentum? The upper row of the two colors that I'd have down here, that's momentum. And you'll notice momentum comes and goes. It's a little bit more twitchy. It's not quite as twitchy as sentiment can be, but it's not as stable as trend. If you're trading well, if you're getting follow through, that's trend. All right, let me give you another example of trend. And this is an example from the Sector Secrets Mastery. We're long JP Morgan. All right, we're not looking long now, right? But I'll tell you what. This is our, we are still actually in this trade. We've scaled out once. Remember, differentiate yourself from the bulk of traders who are doing one basic thing. And that is they see a candle like what we saw here, right? That's the 18th, not 19th, sorry. They see a candle like on the 19th, and today, maybe the 22nd, they're interested in it, right? So it's the 19th. That's the 19th. So then they get interested in it, say on Monday or maybe today. But that's because of the one big up candle. What if instead you're able to say, look, the trend and momentum are largely bullish. And even though we've got a little neutral, I'd rather be following the trend that was. So rather than chasing something after a big move like this from Friday, how about asking yourself, where can I buy support? Right? What is support? It's buyers are buying, it's a floor, it's demand, however you want to call it. Call it a ham sandwich. I'm not going to get hung up on the name, but what we want to ask ourselves is, would I rather be bullish or bearish? And therefore, that's going to pinpoint support or resistance. And so this is a really great trade that we're already in from way down here. I believe it was a 166.80 trigger, not 170.80, 166.80. So now we're going to see how much higher is high, right? And we got to love financials. Financials have been coming on for a while. Financials are a big reason why the S&P is keeping pace with the NASDAQ. If you've been watching or reading the Top Tier Outlook newsletter, late October, I believe it was, we started talking about in the newsletter that financials are joining tech, and that's why S&P and the NASDAQ are going to track together, because tech plus financials equals S&P. And that's where we continue to watch XLF, we continue to watch XLK, and we'll continue to be bullish because that's what the sentiment, momentum, and ultimately trend are mapping to. And Bot's reminding me we were 2x and running on that JP Morgan. So I love trades like that, right? We're 2x. So we doubled the cost of our calls. So they're worth twice as much. Great. That's a needle mover. That's a needle mover in an account. So that's a great trade that we're continuing to manage. All right. So as always, gang, if you have any questions, feel free to type them in. And let's see here. All right. Got quite a few of them. All right. Let's get to it. First up, Jack asked, good morning. Good morning, Jack. I was reviewing the CBOE. Okay. And it appears there's a shift to hold. Well, first of all, that's the CME, Jack. So Chicago Board of Options Exchange. I don't know what on the CBOE you're looking at, but make sure you're looking at the CME FedWatch tool. But I agree, there has been a shift where the hold and the cut are about neck and neck, right? I wouldn't say either one is overwhelmingly probable. They're both possible, and they're pretty much neck and neck. So absolutely, March has become, I think the best way to phrase it is less dovish, right? It's less dovish than it was before. And if it's less dovish, it doesn't mean that we're not getting cuts. We just may not get a cut in March. The one thing you'll also notice, Jack, if you're looking at the CME FedWatch, is that May and June are still largely dovish. We are still expecting cuts in May and June. So those are things to keep in mind. And I love that you're looking at it. Yeah. So I'm still dovish. It's not that delays are going to be a no. It's simply that based on the data we have right now. And remember, hey, Jack, PCE is this Friday. So let's see what it looks like after 8:30 a.m. PCE, right? But great observation. Thanks. Great first question. All right. First up, let's see here. SPX, the weekly move based on earnings. Okay. Let's see, what other questions? How does Amazon look? All right, let's get to it. Amazon. All right. Dime Dad, if you have a question, I wasn't quite sure what that meant. If you have a question, type it in, or if you're just making a comment, cool. All right, Amazon. How does Amazon look on the daily price movement range? So let's get to that last, right? TL, I'm happy to show you. In fact, it's on the chart on the right here. So first is, what's the underlying structure, right? What is the sentiment? Well, one of the easiest ways to determine sentiment on a daily time frame is simply above or below the previous session close. That's really near term. Above or below the 34 EMA wave, or above or below the 200 exponential moving average. I don't use simple moving averages. Let's use recency bias, and that's definitely what exponential moving averages are using. You can even say we're, another thing you can look at for sentiment, we're above the anchored VWAP, right? I don't use a rolling VWAP. We're above the anchored VWAP. So lots to look at in terms of bullish sentiment. So I know I want to be a buyer, right? Now I know I want to be a buyer. The next thing is, well, where do I want to be a buyer? So everything that we have in terms of, I'd say better than half of the tools that I have on my chart are designed to do one thing. Let me know whether or not I should be bullish or bearish, and then to what degree I can be aggressively, moderately, or conservatively bullish or bearish. And that really is the bulk of what my indicators are designed to do. Once we get that going, now the automation of the daily price movement range is really easy. Where is the zone? Can I buy in the zone? There might be other levels to focus on. Heck, there might be other time frames that are better, but I would buy in the daily price movement range. And the last time that we had that opportunity really clearly was the 9th. Yeah, the 9th. All right. So ultimately, if I'm looking at the 9th, then this is all follow through. The 17th, that was super. I wouldn't even call the 17th a great setup, to be quite frank, because I want to see price actually reach the gray area. That's my preference. So you can see that on the 9th. So that's actually really nice follow through in the matter of the 9th to the 22nd. That's some good follow through. So that's what I want again. And if I would prefer to be a little bit more short term on the time frame as compared to a daily, the 1 hour is a great one. Okay, very cool. All right, so next up is, would I trade Netflix? Earnings are today. I do not trade a stock on the day of earnings. So again, I know where most folks are coming from, and this is the year. I'll tell you, gang, and I never want to waste your time, but I'm gonna be very frank with you all this year. A lot of why traders struggle is because they're asking questions that are not leading them to where they want to be as traders. Is Netflix something that I want to trade without earnings, right? That's got to be the first question. Okay. Do I want to trade Netflix at all? I really don't. I mean, it's for the most part bullish, right? But if I don't like it, sans earnings doesn't suddenly make it an opportunity. And earnings is a lot like going to the gas station and buying a scratch off ticket, right? Because the binary move on earnings, presuming we get volatility, is one of two things: either writing premium and expecting that volatility crush, that implied volatility crush, or expecting to be right in a big way on the result. My personal way of looking at earnings is, if there is a run up in typically the 4 weeks preceding it, that rally into earnings for me, and I want to be out by earnings. I want to play that mosh pit, scratch off lottery ticket. Anything that says lottery ticket in trading, is not trading, right? That's just gambling. That's not what I do. I'm not going to put me or my family in a position where I'm reducing my trade to, hey, it's a scratch off lottery ticket, right? I know none of you want to either. Ultimately, what I want to do here for Netflix is maybe wait until after earnings and then see if price is inside the gray zone, right? But what I would even say before that is, what other stocks in the group of stocks that is part of the Netflix trading, right? Let's say you crack open other tech names. Is there anything in a trend? I hope that makes sense, gang. Yeah. I think that, there's a few things that traders tend to gravitate towards. Earnings the day of or the week of. Start that search for earnings trades 4 weeks out, and look how much better your trading is without dealing with the higher implied volatility. Yeah. Okay. Next up, let's see. Dime Dow is asking, bear with me, what's my chart prediction? Hate that word. On SPX in relation to earnings this week. All right. Wow. That's a lot to unpack. So let's go back to asking better quality questions. What is the weighting of the stocks in the S&P, right? We can't talk about all earnings. We have to talk about heavily weighted stocks. That's the first thing. And in no way am I trying to make anyone here question their process, but having done this for 30 years, I can tell you there's always a better way to do it. So first of all, we got to look at all the different earnings and dimed out, single out the top 3 or 4 that are heavily weighted. Yeah, if you've been watching this show for a period of time, you know what I mean. Go to ETFDB, look at the weighting in the SPY ETF. And by the way, gang, I could care less. I know this is super popular. I could care less about what the SPX is going to do. I'm going to be very frank. This is the year y'all are going to hear from me. I'm not going to play earnings the day of, the day before. Nope. And I don't care what the SPX is doing. It's only a choice that I can make to trade after I look at the ES futures. SPX, SPY, XSP, those are all variations of the S&P. And the most complete look of the S&P is the ES. This is a 23-hour-a-day view of the S&P. Once I determine what, if anything, I want to do on ES, which means I have clarity on tech, financials, and healthcare. Once I decide that, then we have the luxury of many, many ways of trading the S&P. It could be SPX, it could be XSP, which I've actually never traded. It could be SPY, which I do favor as an ETF alternative, the options of, right? So we have to ask ourselves, which earnings are going to be part of that? High concentration weighted stocks are going to have a bigger impact. And the Fed news on Friday, we have the PCE, right? So we'll keep an eye on the PCE. But am I going to predict? No, my friend, nobody knows what's going to happen tomorrow. Bank of America. Abhishek, yes. I love this. We sent this out as an alert yesterday. We're already in JP Morgan. We love the idea of more long positions in financials, right? As long as the S&P is moving higher, kind of going back to Don Dowd's question, if the S&P is bullish, financials have got to be a part of that. That's okay. You can carry the S&P, but when you get tech and financials, you're really moving and grooving. I just need a pullback, and we did not get enough of it, although we'll continue to monitor. But yeah, I want a long position there for sure. All right, we have a couple questions from the Essentials room. Muzzy asks, can I talk more about my indicators, what they are, and how they are working for you? Muzzy, that is definitely not a charts and coffee 20-minute question answer. I'm happy to give you a couple breakdowns. So first of all, my indicators, well, when you're here for the show every day, it's the best way to see what my indicators are doing, because you'll see how they map to the decisions I'm making. My indicators are designed to automate. That's the biggest thing. They're designed to automate. They're designed to automate the sentiment, momentum, trend. They're designed to automate the support and resistance that I'll be focusing on. How are they working for me? Muzzy, I've been doing this for 30 years, so pretty darn well. There are adjustments we're making to them. It's really a rebuild. I didn't want to make it sound like it's a minor tweak. These are complete rebuilds. We'll be talking about that more in the future, but ultimately, the reason the indicators work is they're time tested. And I don't mean 2 months ago, and I don't mean some indicator that has to be curve fit every 30 days and things like that. These are tested for 10 to 12 months at minimum before I even think about putting them on a main chart. So testing is a big thing. And then once you've tested, there's no need to continue to tweak. I see a lot of that. That's typical noob move, because curve fitting is looking at what has happened and trying to make the indicator look like it behaved that way in the past. Don't go there. Find something that's been working through multiple seasons of the market, meaning uptrends, downtrends, and chop. And then once you have something like that, Muzzy, now you got something that's worth using and talking about. So that's where I'm at right now. I'm using sentiment, momentum, trend assessments. That's mostly the multi-trend, the grab candles, the wave. And then I automate the zones that I'm going to be focusing on my entries. So now we've automated the Darvis, we've automated the daily price movement ranges and the hourly price movement ranges. And automation, by the way, gang, is the only way to put objectivity in your trading, right? That's the only way to speed up the learning curve. It's the only way to keep from sort of freestyling it, because your charts are saying, hey, Rob, you've already told me what to look for, and this is what's happening. So I never have to do anything subjective on my charts. I read the colors, I look at the colors, the candles, I wait for price to get into the zone. And until then, I do the hardest thing in trading, which is nothing, right? So thank you as always, gang. I'll see you tomorrow, same time, same station. All right. Have a great morning. Keep an eye on that economic calendar. And again, if there are earnings released that are high concentration weighted in the indices that you're trading, please be aware, and vice versa, right? So when a high concentration weighted stock has earnings, it can affect the other stocks in that group. Know your groups. That's the sector secrets secret. All right. Be good to each other, gang. I'll talk with you soon.